Welcome to Markets This Week, where I'll take you through everything that happened in the last 5 days on Dalal Street, from Market Weekly wrap-up to global cues, FII moves, and the latest SEBI developments. Let's dive in. The bears had the upper hand this week as the Sensex closed at 83,938.71, down by 466 points, while Nifty 50 slipped by 0.6% to settle at 25,722.10. Over the week, the Sensex declined 740 points or 0.87%, and the Nifty dropped by 167 points or 0.65%. But for the month of October, the tone was far more optimistic as both the benchmark indices grew by 4.5%, with Sensex gaining 3,671 points and Nifty adding 1,111 points. Global markets moved sideways through the week, weighed down by the uncertainty followed by the much anticipated meeting between US President Donald Trump and Chinese President Xi Jinping. Despite heavy expectations, the meeting didn't deliver a clear breakthrough. While China agreed to pause some newly announced export curbs on rare earth materials and magnets for 1 year, the talks didn't lead to a decisive trade truce or restore any stability to global supply chains. Analysts say that the move merely delays deeper friction and not resolve anything, thereby keeping global investors cautious. Adding to the cautious tone, the Nasdaq, which has been on a stellar run driven by the AI boom, finally hit a pause as investors grew uneasy over overspending on AI infrastructure and stretched valuation, thereby pulling back from some of the sector's recent high flyers. Back home, after strong buying early in the week, foreign institutional investors or FIIs flipped their stance. They turned net sellers and offloaded Rs 3,000 crore worth of Indian equities on October 30. This comes right after they had pumped a robust Rs 10,000 crore on October 28, thereby reflecting a tug-of-war between optimism and caution. SEBI shook up the banking derivative space with new prudential norms for the Nifty Bank Index. Under the revised framework, the index must include a minimum of 14 constituents, up from 12 currently, and the weight of the top stock will be capped at 20%, down from 33%, and the combined weight of the top 3 constituents cannot exceed 45% as compared to the current 62%. The aim is to reduce concentration risk and improve diversification. The move primarily impacts heavyweights like HDFC Bank, ICICI Bank, and State Bank of India, whose weights will be gradually reduced in 4 tranches until March 31, 2026. Public bank stocks reacted positively, with the Union Bank of India leading gains by surging 6% intraday, while the Nifty PSU Bank Index rose 1.56%, thereby outperforming all the other sectors. So, to sum it all up, a volatile week where global uncertainty and cautious institutional flows kept the investors on the edge. October ended on a strong note overall, but the near-term sentiment looks tentative as markets watch how the US-China narrative unfolds and whether FIIs will return back to buying in the upcoming weeks. What do you think will happen in the upcoming sessions? Let me know in the comments below.